Hello viewers, in this video I'll be going over gold miners ETF ticker symbol GDX. We are down about 34 basis points, and on the 1 hour chart we are looking to see the MACD turning negative. On the 4 hour chart I do see we are on support on the 9 and 18 moving averages, but I do believe we may test the 50 moving average soon. On the daily chart, we are currently overbought on the daily chart, or daily RSI, and we may find support relatively around where we hit resistance, which is roughly where the 9-day moving average coincides. So I'll mark that as support. And for resistance, if we do continue on higher, I would mark past resistance as future resistance. So I'll indicate this point right here is at roughly around $24.18. So if we were to move on lower and test the 9-day moving average, that price movement is about 2.3% move down, and if we were to move on higher, that price movement is roughly 2.2% move up. Onto the next module, I'll compare today's current trend right here with this trend that dated back to June 12, 2012 to September 6, 2012. I'll point out why these two charts are similar. So what we have here in the beginning, we started out above the middle Bollinger Band. And if you're not familiar with Bollinger Band, it's a tool used to measure price level and volatility. And we had a down channel right down here, and then we proceeded to stay roughly around the middle Bollinger Band, and we'll mark that right here as blue. And then we proceeded on higher, touching the upper Bollinger Band, and we do continue on higher after that as well. So on here, as the trend in question, we start off in the beginning above the middle Bollinger Band right here, and this will be pink like the previous chart, and we have a downtrend right here, and then we see a couple of days relatively along the middle Bollinger Band, and then we proceeded on higher, touching the upper Bollinger Band right here, and right there, and another one right here. We go on higher. So on what we have is 1, 2, 3, 4, 5 points, and 1, 2, 3, 4, 5 points. So there's reason to believe if the trends and patterns are the same, the outcome and forecast would also be the same. So let's head to the forecast model. I'll go day by day where gold miners junior or gold miners ETF went to back in 2012. So 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, 7 days out. Back then, gold miners was, let's see, up around 9%. So we do have the Fed speaking in roughly an hour and a half, and anything could happen. As of Monday, we have 20% chance of the Fed cutting rates and 80% of remaining or staying with no increase or cutting. So anything can happen. So it is a monetary policy, so it can definitely reach 9% is a possibility. And here's the line chart that I compared it to. The current trend right here and the 2012 trend right there. And that is all. If you enjoyed this content, feel free to like, subscribe, and thank you for watching.